Welcome back, everybody. I am Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number. Pick up the phone and give us a call each and every week. We talk mortgages. Now, if you're out there right now and you're listening to my voice and you're thinking, how can I get a mortgage? It is easier today, yet it's more expensive today. Now, why do I say that? It's more expensive because everybody knows rates have been going up, and it's not the only thing that's going up. I don't know if anyone's paying attention to inflation, but every vendor, every person I do business with has raised their rates. Talking to one of our office affiliates in Virginia, told me that the office that he is negotiating the new lease for just told him that they're raising their rates 30%. Guy said it's first time in 10 years he's raised rates. So everybody wants to get in on the fact that the economy is doing better, i.e. I can charge more money to you. So inflation, what does inflation mean? How is it going to affect you? Inflation simply means that you're going to pay more for things you used to pay less for. And if that's true across the board, nationally we want to see about a 3%, little less, of inflation. The target rate for the Fed and for the Treasury Department has been 2% for the last several years, and we've been actually trying to get interest rate, not interest rates, trying to get the inflation rate up to about that point. Why? Because that means that we're probably getting more pay to people who are working, i.e. the wage gap that is currently out there will be closed if you find most people getting a raise each and every year. That hasn't been happening. We've had wages flat for about 10 years ever since the recession. So this year we're seeing inflationary pressures act on your mortgage, act on your dollar. Your spending is going to be less. Your debt to income ratios are going to be affected. A lot of things are going to be affected. Now, on the flip side, there's a lot more programs out there. We're going to talk to George Gonzalez a little bit later on about Veterans Administration and loans therein. I think the VA loan is a terrific loan. It's fully guaranteed. You just need your VA certificate of eligibility, and then to find out how much you can borrow based on a property. It's 100% financing. It's 100% guaranteed. You just have to be able to qualify for it, and there are some upfront fees to that. But that's a terrific loan, and so George is going to come on and talk to us about programs. But other programs, because let's face it, Fannie and Freddie, they are a fixed loan scenario. So inside the box of what they do, and what do I mean by that? The guidelines to be purchased by a Fannie Mae or Freddie Mac or Ginnie Mae for an FHA loan are very set, and they are very specific. And so if your loan does not fit into those parameters, it's very hard to get a loan. There are loans called non-QM loans which are out there, and these loans are actually being priced nowadays a lot the same as a Fannie or a Freddie or a Ginnie loan. And that's pretty good. We've got 30-year conforming at about 4.375% national average, and that is up, obviously, quite a bit from even last week's show, where I believe we were quoting at 4.25. Stock market's taken a huge hit. This also affects people's psyche and their ability to feel good about the economy. Although, curiously enough, the stock market itself, because it is so high, it's astronomically high. We were up in the 26,000 point range, and for most of us, looking at that versus 24,000 range where it went down to, and I think it's actually made a comeback in the last 4, 5, 6 sessions. But you're talking numbers that is very hard to understand because unless you follow your 401k, unless you follow your retirement, or unless you follow where your life insurance investments are being placed, it's very, very difficult to follow what stocks, what indexes, what funds, all these different things are tied to. I understand if my house value went up by 10% last year. Okay, if you're out there in San Bernardino, Riverside, out in Las Vegas, and the number of other places where this show is now being seen, we're up in Tahoe, Nevada, and California as well, so we're very happy to bring on that new affiliate, and I want to thank Daryl for bringing that to us, as well as the fine people over at KMET, which this show on air or on the streaming video that it is on KMET website. Bill Bruns over there, thank you very much. And of course, Fred for KCAA. I want to thank these fine people who bring the show to you. In all of these places where we are being broadcast, where we are being listened to, you can understand that if your house goes up by 10%, was 200,000 or 300,000 or 400,000, and now it's another. You can understand that because it's quantifiable, it's easy to understand, and you own it, you live in it every day. But a stock market going from 26,500 to 25,900, what do you really understand about that? And how does that affect you? Well, that's one of the problems with both inflation, a volatile stock market, which is going up and down, and of course, the rates that are being raised probably quarterly this year. We might see 3 or 4 different rate hikes by the Fed, which of course affects your short-term borrowing money and your credit cards as well as your card note. All of these things are affecting what's going on in the mortgage market and what's going on in the market for you if you want to get a loan. Anyway, I'm Jeff Barton, really happy. If you want to reach us by email, info@malibufunding.net. You can pick up the phone, give us a call, or you can email us. We are on YouTube. And Daryl, what is that new YouTube channel that we're on?
It's Jeff Barton, the Real Estate Voice.
The Real Estate Voice. So if you type in my name, Jeff Barton, The Real Estate Voice, you will see our YouTube videos. This show, along with the Las Vegas Real Estate Show, which we do every month. We tape about 5 or 6 shows, and then they air throughout the month. So if you're looking to see and hear these comments again, you certainly can download the show at the radio stations or go to YouTube and see it. We're also broadcast and soon to be broadcast this particular show out in Las Vegas, Nevada, a new channel out there, and that is to be announced. And if you're out there, again, we've got that. We've got our Twitter handle, Jeff, @Jeff6493, and a number of other channels, Facebook being one of them. And by the way, Daryl, did you hear Facebook's new algorithm? Like, let's say I wanted to broadcast this show, Facebook Live, or I wanted to reach with a advertisement about the show. Now, I have not that many. I mean, a couple hundred, 300-400 people on my Facebook account. And believe it or not, that's not that many. Many people have thousands and thousands. Facebook is now limiting your ability to reach your entire group until you prove that you can reach a smaller subset of that group to a greater percentage. Did you hear this?
I heard that, and I'm getting Facebook messages from a lot of friends that merely liking something or clicking something doesn't mean that you're going to continue to get the string of posts that they do, right?
Right.
If you notice, when you go to Facebook, there's certain people in your core group that you continue to see things that they post, but I've got like 2,500,
right,
almost 3,000 Facebook friends, and I only see stuff from the same 30 or 40 people. And what happens is, unless you respond to them or type something in like good job or thank you very much or see you later or see you soon or haven't seen you in a while, they fall off and you don't get the posts from them anymore.
It's why are they doing it? Is it more about security, or is it more about being able to sell boosting? What is this?
Well, they're selling their advertisers on traffic.
Right.
And just giving somebody a thumbs up probably is not a lot of traffic, but if you respond to them, they count that.
Well, there are a lot of companies.
The advertiser as being, more beneficial.
Yeah, I understand. I think there are also a lot of companies out there who buy audience, right? They buy people. Yeah. So this is a way to prevent somebody from saying, hey, I have 10,000 people who are on my Facebook account. Well, maybe 5,000 of those are what you bought, and they're really not active. Maybe this is part of it. I don't know.
That could be part of it, yeah.
Yeah, okay, very good. Couple things housekeeping-wise. I don't know whether you're aware of this. There was a new, proposal by our president about trying to feed the homeless. I don't know if you saw this. And
missed that one.
Okay, so his idea, rather than give them, EBS or EBT cards, they used to give out food stamps, but that's basically what the idea is. It's welfare for people who really don't have money to buy food, basic items. Instead of giving them the money through the EBT cards, he wanted to give them a box of food, okay? Just picture this in your mind.
Cut out the middleman there.
Yeah,
so to speak.
He's calling it, 1 minute, okay, sorry. He's calling it America's Harvest Box. This is what the name of the program might be.
See.
Right? So in response, there wasn't anybody who said they'd ever heard of the idea, even in his administration. And again, I'm not a Trump basher, but this particular one, how are you going to have distribution collection of food to, I don't know how many million of people are on food stamps, maybe 20 million
there's a
people
lot,
in
yeah.
50 different states. What are you going to set up large distribution channels? You're going to have people who are going to hand out boxes of food. This has got to be way more expensive than just giving somebody, $100 a week to buy food.
It's a logistic nightmare.
Amazon couldn't figure it out.
Yeah, it's like government cheese, if you remember government
Yes,
cheese.
of course. Yes, exactly. You got a block of cheese as big as your house, and there you go. Enjoy that.
Government cheese, it's government cheesy at this point.
Jeez. Anyway, if you have thoughts on that, terrific. Otherwise, we'll stay tuned. We got some great guests on the show. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome, everybody. I am Jeff Barton, your voice in the mortgage industry, and thanks for tuning in. 888-713-2929 is our telephone number. We get a lot of calls about the show, about what we're trying to do, which is to bring information to you about the mortgage industry, about the economy and how it affects your decisions to buy and sell real estate. We think we're doing a good job in that. The response is pretty good, overwhelmingly on the positive. We bring great guests to the show each and every week, about 3 per show, and we're on a number of different places in the Inland Empire. San Bernardino, Riverside counties, it's terrific. Reaches all the way east to Los Angeles and south down to Orange County as well. We have a terrific signal, or 2 or 3, and we're also up in Northern California as well as in Nevada. So we're really happy that the show is going well. I wanted to talk a little bit about, now why do I say that? I hear it said on the radio all the time, I want to talk. Well, just talk about it. It's much easier if you just, just get into something. And there are a lot of different people who are in the mortgage industry who want to take control of the process, and this is why I bring it up. The process itself is really simple. You need 6 bits of information, 6 pieces of information to get going on what they call a CE, and that is an estimate about your loan. Whatever your loan is, you have to have estimates of costs, both the percentage rate, and then when fees are added in about the loan, what the APR is. And what these 6 pieces of information, you have to have proof of income, Social Security, name, address, 2 or 3 other little things, and we can get you a cost estimate as to what it's going to cost. And during the process of the loan and by the close of the loan, the tolerance for the difference between what the estimate of the loan was and what the actual costs are is $100. So if someone quotes you a cost estimate on a loan, it has to be the same as when you close that loan. So that's one good thing about getting a loan, about trying to get a loan, and about wanting to get a loan. So if you're hearing people who are in the industry wanting to take control, sit you down, bring out a big notebook of things that you have to fill out prior to getting loan approval, just understand that it's not that difficult. Proving income is probably the most difficult. Credit is easy because you can just go online and, $25 later or whatever the charge is for your particular lender, and that depends on the lender and it depends on the different level of services that they're asking for. If you just want to get your credit score, go to myfreecreditreport.com and you can get a free credit score. Usually that's a combo credit score from all 3 bureaus, or it could be just one of the bureaus. In loans, we take 3 bureaus, what they call a tri-merge, and we get them together to form a credit score on you. Obviously, the better your credit score, and credit scores nowadays are changing, as everyone knows. Anybody who's listened to the show knows that we're taking, instead of snapshots, we're taking a 18-month history. So it's a more of a look at your credit history in the last 18 months, 18 to 24 months, versus just your credit history today. Like, what does it say today? No, let's look at what the payments are. For instance, you might have had a bankruptcy 8 years ago, 7, 8 years ago. It's still not off your credit report. Well, the trending credit report, which is what I'm referring to in the last 24 months, is going to give more weight to that 24 months than what happened years ago, which would obviously be brought up in just a static credit report, which is what they used to do. The trending credit reports went into effect about 6-8 months ago. So if you're seeing some effect on that in terms of how people are treating you credit-wise, well, that's why. And if it goes the other way, i.e. you've not been paying your bills on time, or there's some issues with collections, or there's some late on your mortgage, yeah, that's obviously going to affect your credit more negatively now than it used to. What they're trying to do is get away from just looking at one snapshot. They're trying to take into consideration you as the borrower, and if you've been good, it's certainly going to help you, and conversely, if you haven't, it's going to hurt you for a while until you can get your 24 months trending credit report up to where, you know, it's supposed to be. CFPB, what's going on over at the CFPB? The Consumer Financial Protection Bureau is the bureau obviously created by Dodd-Frank. We talk about it all the time on the show. There's a new director, Richard Caudray had left, and they say he's going to be running for senator or governor of his particular state. But the new guy in Mulvaney, every time there's a new president, there is a report that is generated by most federal agencies which talk about the direction of that particular agency. Okay, whether it's HUD or the VA or the FBI or, you know, all the government agencies, and there are hundreds of them, write this projection of where they want to be in the next, 4 years. Well, Mulvaney wrote one based on the fact that President Trump, is the new president, and instead of listening to Caudray's projection of his 4-year report, Mulvaney wrote a 4-year report, and his particular projections differ quite handily from the last Consumer Finance Protection Bureau director. Now, whether this is good or bad and how it affects you, I'll explain it to you. How it affects you is pretty simple. If, in fact, regulations cost lenders more money and prevent them from creating products and services to service you more, not only is the loan that they do currently have and offer going to be more expensive, but the products that they can offer you are going to be less. However, on the flip side of that, if aggressive regulatory procedures and policies are not in place, you will probably have more, not fraud per se, but more of a chance of problems down the line, not like what we had in 2008, 2009, 2007, because the regulatory aspects of Dodd-Frank that we're talking about here talk about back end and products available, not the front end, the licensing, the strict documentation. So I just wanted to read a little bit. I know reading on the air is the worst thing to do, but I'm going to do it anyway. Okay. He says, if there is one way to summarize the strategic changes occurring at the Bureau, it's this. We have committed to fulfill the Bureau's statutory responsibilities, i.e. the law. Dodd-Frank says you got to do A, B, C, D, and E. But the agency itself is the one that directs where and how the resources get spent from their budget and the direction with which they're going to attack the mandate from the law, i.e. in Nevada. For instance, we're out in Nevada, and Nevada's legislature is only in session 4 months of the year. Think about that for a second. And by the way, California, until 1960, did not have a sitting legislature. They had a part-time legislature. So although that's ancient history now, I'm an old guy, and I was born before 1960. So Nevada currently has that. So what happens in a place of a legislature being around is those public servants, those people who are directors, commissioners, people who are in charge of their specific department, whether it be, in our case, the Division of Mortgage Lending in Nevada, or in California, it's the Bureau of Real Estate, which is now back to the Department of Real Estate, which it was 5 years ago. And you talk about government waste, they went from the department to the Bureau back to the department. Now, how much did that cost? What kind of delays? Oh my gosh, I can't even imagine it. Okay, so back in Nevada, where we are currently, no sitting legislature, those people in charge of the agencies about mortgage lending division, they're the ones who decide on every day how to regulate their industry, because there is no legislative oversight except 4 months of the year. So what happens in the federal administration, which has been happening at the CFPB for the last 8 years since it's been around, the CFPB itself has been unregulated because they are not tethered to Congress. They have their own budget, and the only person that can fire the director of the CFPB was the president, and it had to be for cause, meaning that they did something illegal. So Mulvaney's approach is completely different. He wants more government oversight of his department. He wants more transparency of this department. Now, I happen to think that's a good thing. I'm a little bit obviously prejudiced because I'm in the business. So anything that streamlines government activity and oversight to my business and how I do business is a good thing because I can pass those savings on to consumers. Anyway, I'm Jeff Barton. Thanks for hanging in with that long-winded explanation, but I think it's important to understand. We'll be right back. I'm Jeff Barton, your voice in the mortgage industry.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. If you pick up the phone right now and give us a call, we can talk to you about your mortgage. There's a lot of new programs out there. We talked in the earlier segments about some of the issues facing both the federal government at the regulatory area, as well as some of the solutions with new programs. Obviously, we have to have carrot and stick approach to a lot of this stuff when you're dealing with regulatory people and you're dealing with, lenders have to lend in order to make it go forward. So we have rising interest rates, expanding programs, and also, the regulatory environment, which is relaxing a little bit. All of these are good things for you if you're out there right now looking for a type of loan that you just can't get through Fannie Mae and Freddie Mac. And I have asked a good friend of the show to come back, Jennifer Conrad, who's a loan officer, terrific loan officer, and also does some great contract processing and processing in general, so she knows all phases of the loan, and I wanted to bring her back on to talk a little bit about some foreign national loans. Hi, Jennifer. How are you?
Hi, Jeff. Thank you so much for having me.
And thank you very much. I appreciated that picture you sent me. We won't be posting it, but it was very funny, and I got a good chuckle out of it. For those of you who don't know, this show is being recorded so that we can put it on our YouTube channel, as well as our new website called themortgagevoice.com, and several other areas that you can see the show, of course, on KMET as well. So tell us about foreign national loans. I know we're doing some in Florida, and if you could tell us a little bit about qualifications for that. When you say foreign national, what do you mean? Things like that.
Okay, well, actually, it's for any person who is a non-permanent resident alien in the United States. And we want to now try to focus doing more like in Texas and California. Obviously, people in other countries are interested in coming to this part of the United States because of the warm weather, and they're wanting to invest their money. So these are people who want to buy real estate. They're not looking to become U.S. citizens. And we can do this in two ways. We can either purchase a home or have them purchase a home as a second home. And we would verify income, basically, not typical of how you would do it here, but a CPA letter from a local tax account they use in whatever country it is that they reside, who says basically they are in good standing, whether that is that they're self-employed,
right,
or if it's that they're working for someone. They can actually, be working for someone, and we don't provide any type of pay stubs or anything of that nature, but just an employment letter from their employer saying they're in good standings, and then obviously a CPA who's actually preparing their taxes. This is mostly asset-driven. So these borrowers are going to be putting down, on average, about 30%. However, we also have an investor that Malibu is signed up with who's doing 20% down. Now, we also have an option to do this as an investment property. And usually the people do that because it's more of a situation where they're not going to provide a CPA letter, and they're not going to be able to provide the information regarding their employment, but instead they will have a bank reference letter with their banking institution in their home country stating that they're in good standing. They've had their money with the institution for a while.
Sure.
And then they're going to transfer that money, obviously, to a bank that is considered on one of the approved banking lists for the lenders here, which is pretty much standard for any bank that's, listed in the United States, or, that functions in the U.S.
Yeah,
They
a
just
couple
want to make
things.
sure that the money has been transferred over.
A couple things on that. The ability to repay rule, how does that get satisfied if you can't really look at someone's income, or does it matter because it's a non-QM product and they don't?
It's a non-QM product, and the lenders don't report this on the borrower's credit report.
I see.
So the lenders, they're keeping these loans in-house,
I see.
basically. And I guess the whole concept of it is that when you have a borrower that has skin in the game and they're putting down, 30 or 40%,
Mm-hmm.
and then their country is also saying that they're in good standing, then we're looking at people who would be qualified just like, any one of our borrowers here in the United States who also has investment in a property. They're just wanting to put their money here, obviously, because it's safe, and
Do you see the cooperation from foreign banks or employers or CPAs, and how does that translate into, cooperation with a U.S. lender, U.S.-based lender? Is it happening? I guess it's happening, but
we find that actually the CPAs and the employers overseas are very cooperative. They
Great.
understand, that it's pretty laid out. That they either have an employee, a taxpayer who is looking to purchase property in the U.S. And I think because they're getting so accustomed to having these requests, it sort of just makes it, standard to go ahead and produce it. And I've never had any issues with them not being accepted. Obviously the
Right.
biggest thing we run into is getting everything translated, because it can be so expensive, so costly to get things translated from, whatever language it is that they have and, into English. But
Good
that's
point.
pretty much it.
okay, so most of the transactions are done not in English, they're done in the native country's language, and then it has to be...
They are. And then we have to translate it to English. And so, obviously we go through Bradesco and get everything translated and, and go from there. But we don't ever run into any issues. It is a type of loan that, you really have to plan for.
Uh-huh.
You might be able to put, a normal conventional FHA loan in about 30 days. And then with this, I think you need a solid 45 to 60 days, because there are certain things that are just beyond your control, like
course.
translation.
Well,
They
yes.
actually take anywhere from 3 to 5 days to get done in order to be prepared. And it's because you have a limited amount of lenders that are actually doing it.
Sure.
They don't always make it a priority to go ahead and get all of the conditions and stuff done. So it can take, 3 to 5 days to have an underwriter review things. So we kind of want to make sure that we're clearing everything the first time we send everything in, so we
course.
don't have to have them constantly go back around to look at things.
Well, that's the important thing you're saying here is that being on top of this process is really important. Obviously, there's
It
going
is.
to be time constraints on delivery of whatever the conditions may be, or the original submission package, just because of the foreign national, maybe the language is wrong, maybe the documents are in another country, maybe there's some delays there. But being on top of it from a standpoint of a submission is extremely important, and that's what you're talking about doing and getting on top of, right?
It is, and I mean, we obviously have to explain to borrowers, because a lot of times when we're dealing with borrowers who are not from the United States, they don't understand, when we say we need something this way, we need it specifically
Right.
this way, that we have to kind of go back and forth in order to let them know this is not going to work, please go back, obtain this, and, and get it back to us. And it's a limited amount of documentation regarding disclosures and everything on our end, because everything really relies on the lender submitting this. But it's a matter of making sure that those necessary parts that we have, that we're supposed to include, are submitted the right way in order to make the process as smooth as possible. And most of the people who are purchasing are also purchasing new construction.
Right. Okay.
They're not really purchasing a lot of homes that are pre-existing. So that being the case, we're also waiting for some of these properties to be completed. So we may do as much as we can,
Right.
but if we're looking at a time frame, 6 months of getting it done, obviously a commitment is going to expire during that time frame. But
Sure.
then we want to, work it as much as we can. And then, of course, we're dealing with, going back and doing like re-inspections, final inspections,
Yep.
to make sure everything is complete, and providing certificate of occupancies. That's what we sometimes run into, but that's outside of the control of our borrower. But that has everything to do with the builder and them providing that information in order for us to close.
How many people are?
A lot of moving parts.
Yeah, no, it sounds it, but it also sounds like a terrific opportunity for people who want to get into the U.S. real estate market, either as a second home or an investment property, who might normally not be able to do it without 100% cash.
Absolutely. It's a great opportunity to be able to do it. And I'm finding that there are a few more lenders who are starting to do it now, and obviously their requirements are different from lender to lender. And some of them, they're still fairly new, so they're trying to understand the whole process themselves. But it is an opportunity for more people to invest here. And I honestly think it's a kind of the direction that a lot of things, are going, at least on this end, working, on this end of the mortgage side.
What's your way to people to get in touch with you? We're going to flash it on the screen, but for people who are listening on the radio, how would they get in touch with you?
My number is 773-593-6831.
So if you're
773-593-6831.
Yeah, if anybody out there who's listening who has foreign or relatives, friends, somebody who isn't not a citizen, doesn't want to be a citizen, but would like to own a piece of property here, sounds like a solution for them. So please give Jennifer a call. And Jennifer, thanks very much for coming on the show.
Thank you so much for having me, Jeff. I appreciate it.
No, and I appreciate it too. That's a great solution for one of the issues facing our borrowing community now. And thanks very much. Anyway, I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number. Pick up the phone and give us a call. We talk mortgages on the show. This show, particularly this week, we've been talking about programs. We've been talking about regulation, things that will affect both your rate and the availability of loans for you. You don't have to be perfect. You don't have to be 100% clean, squeaky, although that helps. It helps in your rate, and it helps in terms of the smoothness of the process. But whether you get a QM, qualified mortgage, or a non-QM, non-qualified mortgage, there is a loan out there for you. We are expanding the product line. But I wanted to talk now about a loan that has been around for a long time. I brought an expert on that, guy that works for Malibu Funding, George Gonzalez, to talk about VA loans. It's something we hit on every year, and I'm glad he's back on the show. George, thanks for coming.
Hey, thanks for inviting me again, Jeff. I love being on your show.
Well, thank you very much, and I appreciate that. So let's talk VA loans. Give us a brief synopsis of what the loan is and how someone might qualify.
Okay, great. Basically, Jeff, a VA loan is simple. A VA loan, it's insured by the U.S. Department of Veterans Affairs, and it's offered from the lenders. And what the Veterans Affairs does is they back up the loan just in case, one of our veterans happens to go bankrupt or have a foreclosure. That the VA guarantees it. So it makes it easier for our veterans, which it should be, for them to qualify and get into a home for their family. Now, there's many benefits to a VA, including, like there's no down payment, there's no mortgage insurance. The interest rates for VA are the best than any other type of loan out there right now.
What is the VA loan interest rate right now, George, if you don't mind me interrupting?
I would say say if the borrower has at least a 620 minimum FICO score, we're looking conforming VA somewhere right under 4%, 3.99, 3.875.
Okay,
with no MI.
That's great. No, that's perfect. That's a lot lower than what a conventional loan would be today, even a lot lower than an FHA loan.
That's correct, Jeff. Even actually with the borrower who's squeaky clean of a 780 FICO versus of our veterans who are 620. So it makes it a little more attractive. We actually love when we help veterans because they deserve it.
Yep, absolutely right. I think the opportunity for us to be able to help veterans is obviously what we want to do. Having the ability to be able to lend as a lender as well as broker as a broker obviously gives us certain advantages as well.
That's correct. And, the requirements are not very much. There's a variety of ways you can qualify for one of these loans. You can, if you served for 90 consecutive days of active service in wartime, or if you served 181 days of active service during peacetime, you can get a loan. More than 6 years in the reserves or the National Guard, you also can use this great loan for the veterans.
Now, tell me about some of the costs associated with this type of loan.
Man, there's, the thing about it is because of the interest rates, the pricing for them, most of the time there's room to help the buyers or veterans pay for their closing costs and their prepaid. However, the typical cost for a loan that the borrower would normally pay would be somewhere between 1% to 3%. That's, of the loan amount.
Now, when you say you could help out, what do you mean by that? You mean because being a lender versus a broker, you're able to give lender credits to the borrower in order to help out some of the payment costs of the origination of the loan?
That's 100%. Being because
Right.
we're broker, we're wholesale, we go direct, gives us that free access to go ahead and give the overage that we get or pass it on over to the borrower, the veteran.
Okay, and quite typically, what are the loan limits on a loan like this?
They go the same as conforming,
I see.
424, 100 in your standard areas, and then we can go like for instance, LA County or the higher counties, you would be able to go as high as 636, 150 with no down payment.
Wow, that's spectacular. Now, there is a certificate that you have to get. Explain that a little bit.
Basically, all you have to do is prove that you've been that you served. It's DD 214.
I
All
see.
you need to have.
Okay, and the loan officer or you could help them get that as well as the actual borrower could, the veteran could?
Oh yeah, we do all that hard work for them. They just have to give us some personal information, and then we can request it directly from the VA and get the proof for them.
Now, how many loans have you done like this in the last year? I know there's several that we can talk about, but I guess that what I'm trying to ask is, in doing this and having experience, what kind of feeling do you get from helping a veteran, helping somebody who's served to protect freedoms alike, being able to lend money to anybody? We're very lucky and blessed to do that. So the feeling you have helping a veteran, what's that like?
Here's one great experience now that you brought it up. A realtor came to me. He says, "Hey George, I have this veteran borrower who my best loan officer cannot qualify him. My number one loan officer cannot qualify him. Can you see if you can do something because they didn't have a 620 FICO?"
I see.
Now, with the relationships that Malibu has with all these wholesale lenders, we go as low as 580 FICO with no restrictions, meaning their debt-to-income ratios can be higher than the average, even with the lower score than 620 at a 580, and that's what saved the deal and got these people into their house. So that's one example on the benefit of the VA.
Well, they must have been ecstatic, and you also must have had a nice feeling in your heart as well, being able to help people who obviously deserved it, but maybe had fallen on some hard times, like a lot of people did 8-10 years ago.
Right. And to go back to your question, the majority of my loans last year, I say majority, about 50% of my loans were VA loans in the last year.
Okay, projection for this year, rates going up, and is this going to affect the loan, the VA loan, as much as, let's say, it would a conventional or an FHA loan?
Oh, man, no, it's going to be the same across the board. So basically, if it goes up conventional, it's going up FHA, and it's going up VA. But again, these ones, this is the first question I ask Jeff when I sit down with the borrower.
Right.
Hoping that they're going to respond yes. I said, "Are you a veteran?" And
Right.
And just because that's how much of a big deal it is, how easier it is to get a loan for them.
Well, helping people obviously get lower payments, that's a big deal, right? Especially someone who's worked, who's served, who might not necessarily have the steady income because either they're transferring back to civilian life or they've gotten out of the service and are trying to reschool and figure out a way by which they can earn. Most of the veterans that I've talked to and know have some transition period, but having the ability to be able to get a loan that's fully guaranteed, that's a good thing. And I think if you could just shout out your phone number, George, and let people know how they can get in touch with you if they, in fact, are looking for this kind of product.
My name is George Gonzalez with Malibu Funding, area code 909-900-9565.
Okay, great. Thank you very much. Also, George, let's talk a little bit about what's happening just quickly now. We've seen another school shooting, another awful thing. When you talk to people about borrowing, does security in neighborhoods, security in schools, security in general, San Bernardino obviously had a shooting a couple of years back. Well, when we talk about that, how do your borrowers deal with that, or do you even talk about it? Is that mostly on the real estate side that they talk about that?
That's mostly on the real estate side. You know, I deal with paperwork and get to work, George. Get my loan closed. I don't want to talk to you. You're not bringing me business. You're supposed to be working for me.
Oh, I see. Okay, so no, I understand that really, but in terms of just the customers themselves trying to be able to get a handle on, whether a neighborhood is safe, that's not your area. That's a realtor's area, right?
That's a realtor's area, but I can help a realtor enforce that with the buyer, a potential buyer. I could tell them, if it's a good area or not, especially in my area in Rancho Cucamonga, living there for 10 years, I can just tell them that, this is a good place,
Well, you've also got a bunch of kids in school, and, you've got kids graduating, so you've been there for the long haul. You got a great family, love your posts, love seeing it all the time, whether you're at a Dodger game or wherever else you might be.
Thanks, Jeff.
No, thank you very much, and I want to get you, as I said, out to Las Vegas so that you can come on the Las Vegas Real Estate Show and talk to the viewers out there about VA loans, because I think it's a terrific product, one that we really want to push in that veterans deserve it, and we're here to serve too.
That's right. That's a good idea.
Okay. Hey, George, thanks very much for coming on the show once again.
No problem, Jeff. Thanks again for having me anytime.
Thank you very much. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number. Pick up the phone and give us a call. We talk about mortgages, purchase mortgages, refis. Actually, the refi market's kind of down right now, but purchase mortgages, absolutely there. And if the last interview we had with George is any indication, product out there is tight. So if you need to get a home or want to get a home and you want to get out of your parents' basement, or you just want to have the American dream, whatever it is, we certainly can help you getting a pre-qualification, pre-approval letter to be able to walk in with your realtor and say, hey, I can get this done in 30 days is a really important step. And if you're competing against 5 or 10 different people, maybe even more, it's very, very important to do so. I want to shift gears. I can't even speak. But I want to shift gears a little bit. Reed Blake has never been on the show, but was on our Las Vegas television show during the last taping. Really appreciate him. And I asked him to come on the radio station because he talks about a different kind of lending, although it is Business Capital Experts is the name of his company. I want to let him talk his story and tell you a little bit about what he does. Reed, welcome to the show.
Thank you very much, Jeff. I really appreciate the opportunity.
No, I appreciate you. I mean, I so enjoyed your information you had the other day, so I wanted to bring it to our audience out here in San Bernardino and Riverside counties, as well as up in the Tahoe region of California and Nevada, those 3 areas where we are being broadcast. Tell us what your company does, and then I'll ask you a couple more questions.
Oh, you bet. We, we're a small firm, we're a boutique, but we do all of your standard of funding for real estate investors, but we have kind of a niche that we've carved out that has been extremely popular, especially for the real estate investor. We do unsecured capital. Unsecured funding falls into 2 primary categories. One is called unsecured cash-based business lines of credit, and the other one is unsecured cash loans.
Okay.
And the lines of credit are exactly what they are. You're issued a line of credit, and I'll just use, to keep the example simple, a $10,000 limit from a financial institution.
Okay.
And you've got $10,000. You get to use that money over and over and over again. It's forever money. You draw down, pay back, draw down, pay back.
Uh-huh.
The unsecured cash loans, again, standard type of loan, has an amortization schedule and interest rate, but again, it's cash dumped into your business bank account.
Okay, so when that is done, and you talked about investing that into whatever the business wants, right? There's little to no oversight once the money gets transferred. Is that correct?
That is correct. Yeah, in both categories. We like to refer to it as control. Well, first of all, this money is tied to your business, to the EIN. It's not tied to your Social Security number. So again, this is exclusively funding to the business itself. But to your point, yes, you business owner, have control of this, the real estate investor. You determine how best to deploy this capital. You know how to run your business. You know what you need it for, et cetera. A lot of folks use this money to have their, air quotes, skin in the game.
Right.
They're using a private money partner or a hard money partner, and they want their 10 or 20, you got to have 10 or 20% in. Well, they simply draw down or tap the loan, and that's their skin. So one guy refers to his lines as his skin. I need some more skin. And that's what we do.
All right, so let me chase this down.
Control belongs to the real estate investor.
So I want to buy a property either for whatever reason, and I have a business line of credit, or I have the revolving credit line or the loan directly. I can take that money and put it as a down payment on this property I want to buy, and that's your skin in the game. That's what you're talking about.
Yeah, exactly.
Okay.
We call it. We talk about this is the money that runs the day-to-day, week-to-week, month-to-month operations of your business. This is the cash. It pays for your office space. It pays your salary. It pays your rent. It pays for the company car, the gas that goes in the company car. But importantly, from a real estate investor's perspective, they're able to tap this money to sort of get ahead of the competition. In other words, they discover an opportunity. And instead of competing with everybody else who's trying to do creative financing and do
Right.
this, do that, they're able to literally walk in with their offer, and as part of their offer, stroke a check for whatever earnest money they need right then and there to lock it up. And we've all heard the cliche, "Cash is king."
Yep.
Well, it's a cliche because it's true. But there's a quote that people are from me, and this is a Reed Blake quote, and that is this, Jeff: "Cash is oxygen. It breathes life into your business. It gives you the ability to pivot and be nimble and take advantage quickly of those opportunities." So again, to your question, yeah, they draw down or tap the loan, get the down, get the earnest money agreement, whatever the case may be.
Right.
And then hopefully they come back to us to get the rehab and acquisition capital. 'Cause
Okay.
we do that again.
Give us an idea as qualifications. Obviously, this sounds like a terrific idea for a small business owner, medium-sized business owner, somebody who doesn't have access to capital currently, who's looking for an opportunity like this to be able to utilize the money, maybe either to run the business or to take advantage of some real estate opportunities. What's the qualification process? How does one qualify?
Great. Yeah, there are 4 criteria. One is because it's a business, the business funding, there needs to be a business. Typically, it's going to be an LLC or an S corporation or whatever. If a business owner doesn't have that yet, we help them do that. We do it very quickly. So it's not like they have to have a seasoned business or anything like that. Number 2, credit. Now, the next thing I'm going to talk about are really based upon one factor. If the business owner, in this case the real estate investor, does not have an existing track record with corporate experience and corporate TransUnion, then we have to look at the individual business owner. Okay?
Okay.
And again, most people didn't realize there are business credit bureaus, and there are. So in the absence of that, we're going to look at the credit. Now, you'll note that I don't say credit score because it's not a score-driven product.
Right.
This is going to sound weird. It is a blemish-driven product.
Right.
And so there's such things as good blemishes and bad blemishes, and they vary from file to file. So we have people who are like shocked at what we're able to do for them. The third criteria is what we call credit capacity.
Right.
And again, in the absence of the business having any funds that are exclusively tied to the EIN, then they are going to look at the personal. So you look and see how much capacity you have. In the personal world, the more you have, the less they're entitled to give you. And real estate investors run into that all the time.
Yeah.
But in the business world, the more you have, the more they're inclined to give you. It's crazy stupid. And so again, someone who has, say, $10,000 in limits of
Credit cards.
revolving credit, and one has $30,000, the person with $30,000 will get more money.
Right.
And lastly, it's utilization. How much of that credit capacity they have is utilized? Anyway, so
What do you
we run into
recommend,
challenges-
just quickly, what do you recommend when you're lending money to somebody who wants it, if they're trying to fix credit, if they have a utilization? Do you recommend below 30%, below 20%, or does it matter?
Great question. I'm gonna answer it like two ways. What we call the sweet spot, and then the rest of the bat. In baseball, you have the sweet spot on a baseball bat. You get the sweet spot, you're driving that ball somewhere. But you may be on the end of the bat, farther down the bat, you may get jammed. So what we do with our clients is we say, look, we'd like to get you to the sweet spot. The sweet spot for the UBLs is typically 35% or less.
Okay.
On the UCLs, 50% or less for the UCLs. And so some clients will say, great, work with me for 30 days. Let's get me where I need to be so I can get that, I can be in the sweet spot. Others say, nope, go with what we can do, knowing that they're going to get less than the folks that wait till we get in the sweet spot.
Okay.
And remember, Jeff, we take our clients, and we're not kind of in our industry, we call it one and done or just simple credit card stacking. We take our clients through a 2-year process. We literally hold their hand through this entire process. And again, based upon the success of the company, at the end of 2 years, they'll have $500,000 to $2 million of this stuff.
Hey, quickly, because we're up against the clock here, give somebody who's listening a chance to get a hold of you. How do they do that?
Great. Here's the phone number. The phone number is 844-980-8800.
Okay.
I'm sorry, 844-980-8800. If they put in extension 801, they will go directly to me.
Okay.
So any of your listeners that call that number and put in extension 801, I'll field the call and I'll work with them personally.
Okay, you know what?
Those staff people.
This is terrific information, and there's so much to what you're doing. I'm going to have you back on the show to re-explain it, and obviously when we get further down in the year, we're going to have probably more need for products like this than less. I really appreciate you coming on the show.
Thank you very much, Jeff. I really appreciate it, and thank you very much.
Okay, thank you, Reed. And that's been Reed Blake from Business Capital Experts. And I'm Jeff Barton, your voice in the mortgage industry, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.